Good morning. Good morning. Good morning, and welcome to the Breakfast Club. I just woke up like 5 minutes ago, so I'm a little groggy-eyed, but I'm looking at the charts here going, oof, I guess I'm kind of glad I didn't get up a little earlier. That's some serious CPI reaction there. Looks like we finally took out those highs we're looking for on the hourly on the 11th, but we didn't take out the bigger highs above us. Interesting. They just refuse to want to let it get up there, eh? Well, I hope you all just sat on the sidelines and waited for that to happen instead of trying to engage CPI, because that is seriously an account ending drop there. Quick sweep up and then slam. Holy smokes. Hopefully you've only just been watching it. I'll get into this one in a minute. See what's going on with that. Dow Jones, all the same thing. This is good. I do like a nice higher pre-market on natural gas. That's good. I still got a long way for that to go. Copper. If we can get above this high again, I like this as a new price leg. For another swing higher. Yeah, we got to get above this level still. Gold, get to it in a sec. We're making our way through this line here now. We'll see if we get through the bottom of this and break this little structure here and get back deeper into this range. Then I'm looking for another return back down here. Soybeans did not kick off there and go higher. It just came back to the main candle here. It's open. There's a little tiny imbalance right there. We've revisited the imbalance, came lower, looking for a run on the low here now. Right in the bottom of that imbalance to this imbalance. And no coffee this morning. I have to go for blood work, so I have to be on a fast. So no coffee. I need my coffee. Always banging around inside this premium box right now. And coffee. Oh, coffee. We've refilled the Fair Value Gap, the BISI. Let me see if we can get back up through here and use it as support to go higher. See if we use this blue box here. Come lower. Lean piggies hit our next objective. Those are my next two little objectives in lean hogs. Crude oil. So far, this is the new regular trading hours gap. So I'd like to see if we can't get it back above that level. We've revisited the sell side liquidity here. So if we can get back through this little piece here and the main threshold, I'd like to see that go higher. I'm really stuck between these two spots here right now. Set objectives sold high here. Fair value gap first. Breaker, mean threshold, old high. Then you get into this new week opening gap. It's the draw. We're going to get above this new day opening gap here on this on the 4th of the month, 2nd of the month, the 4th of the month. Okay, so we're above that. We're above this now. Tap that. You want to see that leave from there. I got to get below this one here. I don't want to see it get below here, but if we do, we end up coming through this to here. I don't want to see that get taken out and dig down deeper, so that's going to be my fail-safe right there. The ideal one is I'd like to see that stay that hold and then keep pushing higher. I don't want to see this get taken on the downside. And it's just before. That's before 9:30. Should probably wait. That'll be my fail-safe then. If we take this out on the close, I'll move to the sidelines, but we could retrace down into here. Gold, all the way back to the discount box. So we're looking. I put this on last night, so CPI numbers brought us right back into that. Now we're looking for a March higher. If we can get above this level here. Wait and see what 10 o'clock brings us. If we can get above this level, hold it for support. Like if I have a body close above here, come back, find some support in this. I'd like to see us run back inside that range. This is the first range, then that whole range there. Bitcoin. See how when we want to extend the range, we drop below it. Didn't extend it yet. You drop below it. You come back into it. Come back into it. And then finally extend the range. So we're looking for downside objectives here now. And Disney's dropping down even more. 107. I don't know if Craig's looking at any of this or not, but keep your eyes on that level. I'd like to see Walgreens hang out of here. There, freeze up in here. And we're at 35 already, so we're back to that very low right there. So we could just roll over here and come back down. TD's making it higher. Good for you, Gary. I'm glad you're getting some action off of that one. DAX, still looking for that 260 on DAX. Still looking for Ford to come lower. Still looking for Dodge to get lower as well. So how about this discount array here? We've already traded through it multiple times. So I'm expecting that that's a weekly, by the way. So the daily, not so easy to read, jumps around a lot. So I'm looking for around these lows. Excuse me. No energy this morning. I think this is how you have to be kind of subtle and slow. And with CPI numbers, no rush, no rush. Let's not rush in here. Let's just slow down. Let's take a sleepy approach. So that was that upside objective we looked for in US dollar yesterday. We wanted to get up right into here, and it did. So I want to see if we get a reaction off of that. So your downside objective in euro, which we pointed out yesterday, hit. So if that reaches for its high objective, this should reach for its low objective. And if this reacts off of here and starts to run back down, then we have this boxing thing that's been going on here from low to high to low, high. Now, if we have take a run down through this and pop below the lows, then we should expect to see this little fair value gap, that one taking on the upside again, and then run for the highs. So Japanese yen falling out of bed. Back to this original consolidation. You want to see this. If this is a CAM Model 1 entry, look on the lower time frames to see if there's a reversal. So you're looking at CAM 1, CAM 2. If you lose CAM 2, forget it. It's coming for the lows, coming back down to the next consolidation below you. Oops. Did you know from TradingView that if you hold on to this, click down on it, hold on to it once, or double click it, it produces the same chart again. So if you say, "Oh, I like that chart," just double click it, and you can make another one. Saves you having to come over here and try to reproduce one and then go hunt for the letters and stuff. Just double click it and it'll produce the same one for you. And none of that stuff I'm interested in. So 2 minutes away from opening. Here we go. Quick Solutions. You're the first one through the door this morning. Good morning. Good morning. Campione, Greg, Russell, good morning. Good morning, Chris. Sweet reversal on gold on a 5-minute chart. Ollie, good morning. You're buying Disney down here, you said? 108. Wasn't the 107 at the pre-market just a minute ago? It's up to 108. It's because Craig's buying it. United Airlines, they've dropped down below this level, so if they come back up into here, look for a run in this low to extend the range. Yeah, you wanted to see that stick there come up and then start leaving, not revisit it here. So United Airlines is your downside on that. Inside that range, that's the downside objective you're looking for. Just opened. There's your down. Thank you. Boy, are they ever looking to knock everybody out trying to catch those old highs there, hey? Anybody wants to take any run up there, they just keep driving it down. Good morning, AI, and good morning, Peter. Think you could be an initial driver higher into the news. I gotta get 609 short. I have an old first presentation marked at 646 that could produce the reaction, keeping my mind open though. Yeah, I can see where we're stuck in right now. Here and here, they're overlapping. This one here and these are overlapping, so I don't want to see it break above this level here first. Get some support off of this. And this level, even this candle would be nice. Pop above it, find support here, and use this. Ignore all of this. And wait for it to break here. Get a little structure break to start digging into this, and you have to just take your fib tool from the high to low. When they're this big, you just kind of split them up like this. You take quarters. But you got to get above these candles, this candle, this fair value gap across. When you're sitting inside that sucker, so you're hitting the consequent encroachment, you're still inside that one, this range here. So you traded above it, you come back inside it. So box to box inside this range, you go from here to here. So you hit that box, you come back down to the box again. So there's 1, 2, 3 rounds of boxing. So you want to see this get above here, find support, get above there, find support, and then we look at that main big one back here for continuation. So your first little start, because you've taken this low out here, is here. Then you get above that one, back to this one, run up to the premium, or through the premium. You're poking now, so you're kind of giving the impression where you want it to go, and then you roll over. And we'll see if this order block here holds price now. To slowly march up. Make that bigger so you guys can see it. See if this holds here and starts to march a little higher. Yeah, that's what I've heard. Buffett's moving a lot of his stuff into cash. He thinks the market's due for a big crash. I heard that rumor, but that's just a rumor. There's no actual news that I've seen. But if you see real news of his pulling money out and not just people like me saying he's pulling his money out, there's your first presentation. So this candle did hold what we're looking for. It's good. React. Now I want to see it start getting back above this fair value up here. And not just roll into this consolidation again. Nice displacement candle above that would be nice. And then I want you guys to document whether or not you got that FOMO, fear of missing out. The FOMO, if it takes up to here and then you start to see this little fair value gap forming and a little touch and you wanted it to come back here and it didn't do it and just left on you. Remember, there's a setup in here. If it does just that, we see a fair value gap, and this is another, you want this to be the breakaway, and then it can just form another one just up here, come back down, tap the fair value gap and not fill it, and run higher and not even come back into here. It closed above it right here. You come back, you tap it right there. Now you're looking for that to continue going higher. Now I think you've got this whole box right here now. I guess you have to include this and this, that imbalance and this. You have to include the whole thing. Wait for something to get above here. $463, you say? Let's see if we can get a run off of that box. A big displacement candle up here, not these little tiny ones. Good morning, Armadeep. Aramdeep. Amardeep. Sorry, I got it wrong. So now we are above this candle. Let's see if we close above here. You're waiting for the 10 o'clock? I'm in a small long here off this candle's high. No, this candle right here. My stop's already in break even plus the cost of the trade, so. We've already revisited this candle. If we get one of those weird ones that comes back into this candle here, I don't want to see this open get taken. So just keep on marching higher. Get us another propulsion candle in here and see if we can use that for continuation. $672. What's my target? 669 is previous day's low, so a mitigation target. Current range. Yeah, I'm doing that whole 50, 62%, that whole fib tool thing. So if I take this whole range right here, from here to the range that started here, and you do this, I'm just going to fib tool this out. I've only got a small run in here, so as soon as I hit 50%, I'm already past break even anyway. I'm kind of just following it up a couple of candles behind in case it runs back against me. I did like this initial first presentation and that return to it. That was nice. I thought, oh, that would be nice to go along there, but I wanted to see a candle start digging into here. So now I'm chasing that sucker right up behind that there. So I've hit 50%. I'll take some of my trade off, pay myself, and then let the rest ride, and I'll pull up behind it. 62, 70, and then, because if we end up getting a big news release and it slams back down like Ollie was just suggesting, I've paid myself on the way back up. And if I'm on the wrong side of it, you'll see it, it'll come back, great fair value gap here, rip right through it, and that'll be my indication we're coming back deeper into the range. My one's a little cleaner than this. This lines up with this candle right here. Now I'm chasing that one up. I'm literally behind this candle here now. Doesn't seem to mention it these days. Yeah, he's more advanced stuff. I like it just because it's a good scale out tool. If you don't feel confident about certain PDAs, or you see massive ones like this, you see this massive SIBI and you go, this is all a potential danger zone. Just pull your fib tool on the whole range. So if you do end up catching a little run that you're looking for that first 50%, when it's this big, I like to kind of just chase the candles up behind it. There's a fair value gap sitting right here. So for me, if it comes back and takes me out here, it might be just coming back to visit. So I'll actually drop one more. I'll just drop here because I know if I trade through this on a close, this is potentially another run back into this range without hitting 50%. Pretty sure it's going to hit it, but now I'm right up tight to the bottom of that candle. I'm right in here now. This order block, I want to see it hold. There's 50%. So I'm going to pay myself one here. Just pay myself one there. And I'll just got one left. And I'm right here. I don't want to see this order block give way now. That's the little propulsion candle we're looking for. I want to see this candle get used to go higher. So I'm just sitting at this low here. We can get up to 62%. I'll just start really chasing my candles up here. This doesn't mean it's going to reverse here. I think it's just before the news event. I'm just catching a little run up before news because the unpredictability of the news is a little crazy. So I'm just super tight here. Now, if it does take this, look for this down here. I won't be in that if it starts to close below here. That's it. Now my stop loss goes right to the bottom of that. I'm out. I'm done on that one. Look at that. It just tapped on it. The body's closed on it. And it's going higher. That's okay. That wick got me again. It was acting on the wick and not the finish. All right. I'll document that. Screen capture this. I have to make a note of that. Screen capture that. And I'm going to save that. Make a note of that. That goes higher. No, they're taking me out anyway, so. Right off that equilibrium again. All I've got in here though is see if we consolidate here until the news release. You see what 50% of the retracement inside here will bring you back to this old high here. And that is not the case. So low on that candle. 65475. 651, so still wouldn't have hit me there. So I'd want to see this candle here provide some support now. Touch the old highs, body, and continue marching into that 62% level. Put that back on there again. If it comes back and gives us a little kiss and starts pushing for that 62 next. I remember a lot of you, if you have a broker that doesn't allow you 3 minutes into I think it's 3 minutes before, 3 minutes after the news event, you can't be within that 3 minute marker. Some of them won't take trades at all. So I want to see if that just taps this and starts to move back up to that 62% now. I was in a trade and had to put stop loss, but when opening it dropped so quickly that I lost $100. I had a stop loss to lose $5. Now I've learned my lesson not to be trading and open. Yeah. When it gaps down, man, it can literally gut your account. Well, no big crowds this morning, eh? Usually I want to see this tap this and start to go, or here. I don't want to see it keep coming back down here. Loses my love for that going to higher right now. We start to give up this mean threshold. See it roll over and come back down into this range again. Now see if 62% will put us here. .62% will put us back in this wick here. So we've got a little fair value gap forming right here. We've dropped below it. We've come back up inside it. We're running lower. Mean threshold. Break-in structure. Start rolling back down. So that little tiny one right there, keep that in mind. I'm going to get this off of here. Oops. So now you want to see if this level is a support level or a now that you've just ran up about 50%, you've just dipped into that premium level. If we roll over and take this out, looking for a run back down into here. And I'll pull this one off here again if we get back above that level. Good morning, Erica. D, how much in dollars or points was your initial risk on the long trade? I just did 2 micros. I just risked 2 micros, took off one at 50%, and then brought the bottom one down to the where I had it here. So I took 50, took one off there, and then so half the trade off there, and the other one I just left sitting right here, and it just came down, tapped me. So now we're right up through this little reversal here. Tap, come back down, clear out this, use this for support, come lower. See how it's just tapping off of that right there? So Erica, this is a good example of now what would I do right here? Well, think about the news. It's 10 o'clock right now. So you wait for this news to release. But that's a reversal right at the top of the hour. Here's a 950, right? So you guys have been practicing this to go higher right off of a 950. There's 950, 951. So there's your first macro fair value gap. And now we've traded through it. So for you guys, your next learnings will be, I still want you to focus on these reversals at like these fair value gaps that we hit them and we keep going away from them. Then you move to the sidelines. But you're going to get really good at recognizing these little inversion fair value gaps at these right times as well. So when you come back to them, these are the times you say, I'm aiming for this first low. As soon as you hit that first low, you move to break even and you go into zero stress. It's important, Eric, I think for you guys who are just starting out or you're afraid to make those trades, that you get into that zero stress environment real quick. So you get your trade into, it's logical if it takes that level now. That would be typically mean threshold and low. If it takes that low, great. And then you move your stop loss from here, and it's a small stop loss. So it doesn't mean to say go super hard on your leverage, just small stop loss. Watch it pan out. So this is one you kind of just, as it's running now, I want you to kind of watch the trade. Same with you, Russell and Kevin. If you watch this trade pan out, so you've already hit your first objective, so you've paid yourself there either at rejection block or low. Always pay yourself at rejection block. You pay yourself a piece there, move to break even, and now you say, look, I'm training my brain to reward what I look for and what I practice every day. Now what I want you to do is I want you to take your fib tool from this low to this high, and I want you to think, where's a nice logical level you'd like to see this continue to retrace to inside this smaller range? And there's lots of up close candles in here. I'd love to see it. See if it gets through that level. Remember we said if it comes back down, we'd like to see it hit here. Didn't anticipate that little run up, but that's fine. Gives you your run above a high. You get your reversal, trade into it multiple times, finally extend the range, come lower. So we could see a retracement back into this candle here, and then an extension from here down to the first target is 50%. So whatever you've got left on your trade, as soon as it hits 50%, you pull your stop loss into some more profit and wait. And then if it hits 62, pull the rest of your profit down to 50. It's a zero stress trade. Now you just get to collect money. Right? And we're calling this as it's happening right here. There's 50%. So now you move your stop loss down, or you would move it into break even, wait for 62, then move your trade. If you've only got one lot on here, I'd be chasing this down candle by candle. Wait for 62%. I like just reinforce a nice positive trade, especially you can get started in the morning. Get yourself starting off a positive trade, gets you in a good mindset. So Erica, if it trades back against you here now, if it comes all the way back here and takes you out, you say that's fine. I'm good. I made some money right to half my trade is off there. I paid myself at that portion there. You take another portion off here. If you've only got one lot on there, you're just chasing it down. And if it comes back and takes you out, I'd stay above that fair value gap right there. Because if it starts to run back through it, you want to see if this is now going to provide leverage to come back inside here. Because you've hit 50% already. So always pay yourself there. Like this was the 50% of that whole range that I paid myself at here. It just ran above like this here. See how it runs below into the discount portion of that range. If it turns around and goes back up now, you just go, well, that's great. If it doesn't, I'm looking for a large. So I start hunting down here on the way down, and I go, what little delicious discount box from if I was going box to box would I be hunting for? I'd be going like this. I'm going to go, and I'm going to include that guy right there. That would be my discount box I'll be aiming for. So if this rolls over to 62% now, these are the things, and now you're typing in here how you're feeling. Are you feeling anxious? Are you getting a little dopamine hit now saying, yeah, I hit it? Just try and set all that aside and just go, I'm just looking for logical levels of entry and logical levels to pay myself on the way down. Get in a habit of paying yourself, not risking. Get in a habit of watching price action to the point where you just go, I'm moving into stress-free. I don't care if it comes back against me. I'll wait for my next entry. I'll go stress-free, and eventually I'm going to catch one that's just going to keep going in my direction that I want it to go as I fine-tune my trading. So you're watching right here now. Immediate rebalance. This one I want to act like another propulsion candle. Keep pushing down. So put a type in here, like screen capture this, put a type in here, some text that says what psychology, what I'm thinking, what I'm feeling. Mark up your charts. Say, here's my reversal, here's my macro, here's my entrance for my short. I caught this. There you go. Pay yourself. Now slam it right down, just above 50%, just above this candle here. And you'd pay yourself a portion there. Wait for 70% now. If this turns into an optimum trade entry reversal, you're in it right now. And you've caught it on the way down. You've paid yourself at a macro. You've paid yourself inside that trade. So if that's all you get out of that, 62%, we're looking for a return back to 62% and pay us right here. That's right off the top of this candle here. So if that stops there and starts coming back against you, it would have hit, if it hits 50%, bang, you're done. If it hits 50%, or you'd be just above, a tick or two above it, right there, you're out. So now you've caught yourself a little run from here to here, and if this reverses and goes back up, you now caught, if you're on the wrong side of this, you now caught yourself a piece of macro, perfect entry, excellent exit right there. Finish off right here, you're done. Now if that trades back against you, you'll be like, oh man, I followed the rules, I followed the fib tool scale out technique, and it worked great. Now if it rips through here, from this point on, you do not judge yourself. If this rips through here and burns right through the bottom of this, you can't discount what you're using this for and the reason you're using it. If it tears off on you, who cares? You focus on your trade entry, your stop loss, and how you manage that on the way down was bomber. In my opinion, it's bomber. Michael may totally disagree with me, but for me, that if you're starting out and you want to find a new way to kind of save yourself on the way down, before you start going for those. Michael puts it on and he puts his buy up here, and it does all of this ripping back and forth. He doesn't care. He's aiming for up there. When you get that good, you don't be worrying about damn fib tools. This is a great way as an intermediate to start you off, getting comfortable with your trade, getting comfortable with you, and just settling into it and being stress-free and paying yourself on the way down till you get to the point where you see it enough times and you just go, I'm going to let it sit right there. I'm not going to chase it down. I'm just going to leave my stop loss up there. If it comes back up to this order block, I'm okay with still chasing it all the way back down to my discount box here. Like if you look at this internal run now, we could come back into this order block quite easily and then reverse and come back down again. But we'll see. We'll see if this continues to roll over and come back down. Does that make sense to you, Erica? And Kevin and Russell? See, 50% of this small range puts us right back into that fair value gap right there. So if it just wants to go just above it into the premium, it's going to fill that fair value inversion one more time and then come back lower. So kind of measure it out like that. Now, don't look for new ways to get in here. If you're trying to say to yourself, well, can I find a new way to get in there? No. I'll share you one later, but right now, don't even worry about trying to get in there. Just be happy you got your 681 to 599. So you literally got 83 handles before you were finally taken out at 16. So 83 handles. That's it. You're done. Move to the end. You're done for the day. You're done for the day. Hopefully that makes sense for you, Erica. It does? Okay, good. Greg. Quick Solutions. Yes, I'm short from 683 micros. Paid one. Stop in profit at 646 and holding for the new low of the day. Good morning, Derek. Good for you. If you're looking for a run on here, that's a great place to look for. 10 o'clock tends to make runs on the 9:30 open of the day, 9:30. So I'd like to see a run on this. There's your discount array. We're still looking for that. So let me close this out of the way now so it's not rubbing. So there's your my downside objective here for if you're looking for box-to-box trading. Now, I agree with you, Ollie. We're looking for that low. If we get through here on a close, then range extension. We're looking for a close below here. Then I'm looking for a nice little swing reversal. And if it continues to go lower, all you got here was a 50% retracement just above into the premium level, and now we've got a nice displacement back down again on a 15-minute chart. And our trade, even if we're on the wrong side of this trade, and this was just trading back to an hourly low, and then reverse to go back down. So people were calling this, I was calling the 50%, which is actually looking for inside this range, back to an old low. We're getting a nice reaction off of that. You saw the reversal up here off this old reaction. So when you're looking for these old lows on an hourly chart, you say, can I find a reversal in here? And you wait. You go, oh, there's my reversal. And it's on a macro. Oh, beautiful. You catch that on a run. You just say, now, if I can run back down into this low and take this low out, super sweet. How am I going to do that? I want to find the discount array. I want to see if I can trade through that discount array and move myself into a hunt for these lows here. As soon as it gets below that. So that's your start, Erica. You know, I know we were discussing yesterday about you get worried about whether or not once you get in, the fear of getting into the trade and being wrong. This is the kind of stuff, if you see it and you practice it, and I want you to practice with the fair value gap, as well as this is where the next step you want to go to. And I love the fact that your eye is already, and Russell's got it as well. You already got the eye for seeing these inversion patterns. Now, when Michael talks about time and price, you'll see that that time at 950, there's 950, the first fair value gap that forms, we're expecting it to go higher. It's taken out a previous high. So as soon as it drops below it, you made a really good point about this again, Erica, and this is what I want you to see. That's why you focus on the fair value gap, because if you're wrong, now you have to change your thinking. The next thing is, I'm on the wrong side of this, and I want you to train your brain to recognize the wrong side if you're wrong. And you picked it out perfectly last night when you went, I paid for some new information, right? My new information was I was not going longer. I was going shorter. Right there was my tip of my hat. So instead of my stop loss going down here to go higher, I take my trade. If I get in my entrance in here and I go, it closed below it, I wait. If it trades back in, it gives me an opportunity to get my trade off. So I'm 0. That's a fail safe. That's your fail safe. It fails and you go next candle. If it trades back up into this, I'm going to take that trade off and I'm going to go short, and my stop loss will go here. Here is where your fear, because you just took a loss, as it were. No, you just paid for some new information. I'm on the wrong side of this. The macro is changing here. We've taken out a little high. We've hit 50% of the range. I'm looking for potential reversal. This would be that reversal. Find the logic, enter in here, put your stop loss there. And if it comes back and takes you out again, you wait for the highs and lows for a structure break. You don't just keep macking around inside this. You just go, I'm wrong. So you wait for a body to trade back above that for your fail safe, tap it, close your trade off at break even again before your stop loss gets taken. And then see how we've got this low taken? We've got a reverse here. We've run above it. So this long would be off here. The moment you see another technique, if you're not using the fib tool, is as soon as I see a reversal on the receiving end, on the back, the downside here, the front end, I'm out of the trade. So there's your front end or your back end. It starts here and then runs back down. You've hit 62% of this range here or more. And now you see this. And you go, as soon as this formed, if while I'm watching this one, I say to myself, I'm on the wrong, like you made the same decision you made here about I'm on the wrong side of this. I wanted to go higher. I'm on the wrong side of it. Now I want to go short. Here, I'm on the wrong side of this now. I better close my trade off. So as soon as it comes here and it comes back and taps that again, you get your trade off. So you've made from here to there, because now you see the new reversal and you're back inside this range. So you're not losing all your profits. You're just following a simple pattern of recognizing the inversions and getting your trade off from, you're using the fib tool, or you're using reversal to, as soon as I see the next reversal, that's my cue to get out of my trade. And if I can get back into that one for a long, I'll take a long back to an order block, which is this breaker here that takes out this high. So you draw that breaker over, and there's another trade set up by using another technique like a breaker entry. Right? So if that's your breaker, you want to see if that key's off of here now. I want to see it, just tap it, roll over and come back down again. And if I can get back through this level, then I'm looking for this and this, because now we've taken a high out. I'm looking for that to be my reversal from premium to discount. See how you start looking at these little ranges again? You say, what range am I in? And what's a premium? What's a discount in that range? If I want to see this range extend, I want to see it come down to here and then extend down. So Ollie, you're looking for this old low, not happening right now, because right now all I've got is confirmation that I'm going back inside this range. So you're under more threat of it not panning out. The moment we break that little fair value gap above you, find support at this, we're going to go higher again. And so your low is still not going to get taken. So right now you've got confirmation once that you're not getting your low. twice right here. You've gone for more than 50%. Now you're hitting into the breaker. If you close out through the middle of this breaker, there's another one. And if you close out above that, then there's even greater confirmation that we're not going for your low just yet. Not to say that you're not going to get there. Right now, this is giving you all the indications that it wants to go higher. And we've pulled those holes out of the wall, and you've used those as points of pivot, points of opportunity to go in the next direction or to support us in the direction we want to go, which was obviously down in this case. So you got the reversal there. So that one's out, and see how much profit you would have. That's your fail safe. Again, you have to develop your own fail safe. And just because I say fail safe, there's rules around fail safe. It's not just simply saying as soon as it breaks that high, I'm out. How it breaks that high and how much you're willing to accept that next candle that never comes back and takes you out at break even. All very important things to keep in mind. See the fact that we're eating through that one breaker right there? We've hit right into it. Now we've eaten all through the mean threshold of it or through the top. So look for here now. So Ollie, when you're looking at your trade and you're thinking, I've got my stop loss here, you're losing all your profits in here. So you have to decide whether or not you're willing to accept that. And that could be a simple Michael thing, like he's willing for it to come all the way back down. Depends if where you entered in, right? If your stop loss is sitting here and you lost all that in profit, here's the opportunity you missed here to recognize that it's running back into the range. It broke a little high, so there's a market structure break here with a body, and then it came back and tapped it right here. Then it says, look, I'm still going higher. I'm coming back into this range, comes back into the range, hits the breaker, it starts eating through the breaker, and has now gone from discount, which we didn't get that one, so you look for the next one. This is still discount, all the way up for that little high. Pull the fib here, you'll see which one is the discount and which one isn't. Right on discount, you see that? You run through it, come back, tap it, right on 50%. So there's your discount buy for a long, for this premium box. You've gone through the premium box, now we're expecting this to come higher. That's just staying on the horse, man. Does that make sense to you guys? Like, it's not hindsight stuff. That's it as it's happening. $16.16. Good. Yeah, if you catch that, good for you, Ollie. If you caught whatever other one you're looking for, 16.16 you're looking for here, you got through it and you're out. Good. Smart move. So you see how you would have paid yourself on the way down. Now it doesn't feel so bad, Erica, does it? That you paid yourself all the way down to that 62%. Then it came back and went to like 70 some odd percent. It doesn't feel so bad anymore, right? Now that it's ripped right through here and would have taken your stop loss out. You've paid yourself on the way down. You can high five yourself now. Screen capture that. And I want you to screen capture that. And I want you to imagine this, because we're going to use a little NLP on you right now. Okay? And all the rest of you who want to do the little private one-on-one with me, I want you to screen capture this, and I want you to write in the most positive way that enforces you. I want you to write psychology on the side here. I want you to imagine the trade that you were just in that trade. I want you to imagine as we were talking through it, I want you to relive that part again. I want you to go back and I want you to play this, because this is so perfect for NLP practitioners. Go back and watch this. Right at 9:50, that macro beginning, and I want you to hear what I'm saying as I'm saying it. I want you to imagine yourself in that trade. I want you to see yourself in that trade. I want you to feel the feelings of being calm, relaxed, in focus, and watching it, that candle pan out. And I want you to just imagine drawing your lines in there. And I want you to, or you can even do this. As a that replay, whatever that replay thing is, this thing over here, if you put your lines in there, like go back to that point, replay it, put your lines in there, practice putting your lines in there and pulling your fib tool on that, and then waiting for that thing to unfold and see it, picture it. Don't go, yeah, I know it's going to happen. Say, I see this, I want this. I'm going to put my stop loss here, write in the word stop loss, put a mark in there, and just let it go. Stop loss, fail safe. If it breaks through this on a upside, I'm on the wrong side. Take this as the first one and go, oh yeah, I'm on the wrong side of this. That's fine. I'm going to pay for that just gave me a new piece of information. I didn't even have to pay for it because it came back and took me out of the trade at break even. Now I can get back in short. My stop loss will go here, put that there, and then just wait. Now you say to yourself, as it's forming, I want you to go through listen to the same conversation I was saying while it was happening. I want to see this mean threshold get taken, and I want to see this get taken on the downside. It does. We come back to tap the bottom of it. Great. That's continuation. I'm going to pay myself at rejection block. Woohoo! I got it. See it very visually inside your mind. Feel it. Actually go through it. So you've got kinesthetic, hands-on, doing it. Visually seeing it, auditory hearing me say it, and self-talk, which is, and look down and to the left. That's positive self-talk. Then do what we call a synesthesia. Look here as you talk to yourself, look at the screen, and then look down here and notice how good it feels to be in a calm state. Check your state. I'm in a calm state. Good. Go back and focus on that. So I want you to replay that, screen capture it, and talk about how good the psychology was, how you felt about a positive reinforcement, about a trade that panned out exactly as we were talking about it. And I want you to start to see the belief in paying for new information. And if it fails twice in a row, you're out. You move to the sidelines and wait for a cleaner setup. That's all. That's all I want you to do. That's your homework. Russell, Kevin, whoever, anybody else. And then I want you to post it on the Telegram channel there under the educators corner. Or if you feel uncomfortable about that, you can just DM me and I'll look at it. But that's your homework. I want you to talk about positive reinforcement here. We're going to start to use some behavior modification stuff and help you relive this. I want you to relive this trade, but I want you to be in that trade. I want you to put stuff on the chart, wait for your 62% and watch how it comes back. And as soon as it does it, you just go, great. And then try it again, reinforce it again, do it 5, 6 times, 10 times. Do that same trade over again. Lay it down, see it, talk about it as it's happening, listen to the words I was using, and you'll see that trade. And then you'll start to flip your brain into, what if I'm wrong? What if I'm wrong? Oh my God, it's working out. Oh my God, what? That's not fucking analyzing charts. That's just you, a victim of your emotions and just being driven by emotions. Cut that shit out and focus on exactly what I was saying there. This is what I want to see. This is what I want to see. You can see me getting all excited about it. That's just what I want to see. It's acting the way I want it to act. Perfect. You're done. You see this reversal, you go, great. I gave you 2 methods of managing that on the way down. One is using your fib tool. Another one is going box, wait for the next box to form. If you can get in on that box, go long. If not, wait for a market structure break, catch the market structure break and run from box to box again. So from discount to premium. Hits the premium, great. Come back, we can tap that. Off you go, extend the range. It's already extended the range. So if it comes back and taps your high or the highest candle here, great. Continue going higher. You see a reversal happening here. If we trade below that, this short or this long here, if you traded from this reversal to that reversal and you catch the next reversal and you go, as soon as I trade off of this candle here in a discount and let it run, and it runs through that, I'm just going to let it keep going until I see a reversal. Here's the first reversal. If this closes now below here, this trade is out. And there's method number 2 for managing a trade on the way down. That's a back end, front end trade. So here's your front end. You wait for the next 13 seconds. We always make our decisions on our end, and your fail safe is going to be down here, just below, one tick below that reversal there, because we can come back and revisit it, quickly pull the wick back up, and see now we've ended below it. So if it, right here, here's your decision, there's your fail safe. If it pops down below this again, you're out of this trade. If it comes back up, you can milk your last little bits of, wait for that open. If it goes below the open again, you're out. That's what I do. I wait for that right there. If it comes back below it, here I'm just milking the last bit of juice out of it. My stop loss slams right against the bottom of that right now. So if it taps me, I'm out. Where I'm out right there. Because I was looking for the last bit of juice to run back up into here to catch the trade, to get the most out of that orange. So that's how I have an extra little rule there on the end saying where, if this comes back into here, I'm going to take, because if it whipped down here and went, came right back, you could have got some juice out of that. And that's it. So you've done the same thing from here to here as you did from here to here. Now you're looking for a run back into this range. If it runs back above there, you can get back in sync with it again. That's the fail safe. If it runs back above it, comes back and down and taps it, you want to see that to go higher. And then you say, ooh, this could be the next price leg higher. That whole price leg, market higher. You guys are getting nuggets today, man. There's some good shit here. That would be the next price leg higher if we break this high here. So you'll wait for the 1030 swing low. So remember your fair value gaps, Erica? We'll do the same thing here. And I want you, but when you go back over that, don't just listen to me, listen to the words I'm using, how calm my voice is, and I want you to picture yourself making that same trade. I want you to physically click on it and insert it, see yourself talking the same talk and listening to the talk that I'm saying and translate it into a very soft, pleasant, feminine voice that is yours, your own internal dialogue, and just hear yourself talking about that. Look for the logic that I'm talking about on the way down there too. Does that narrative continue to follow through cleanly? Is the algorithm acting the way he's talking about it? Or you're going to talk about it in your own head and play that over and over again till you go, yeah, that makes sense to me. And that's what I'll be looking for next time. And and my rule is, and then write your rules out, but I want to see the psychology of what you're thinking, how good it feels. And I want all in positive, no negative. That's your homework. Darren, on my paper, I took one trade today, 902 for a long with a stop loss, 5 ticks below the support level. I felt totally fine without any stress on that trade, knowing that why I have to fill boxes in 30 seconds, feeling great. I have studied a lot of psychology sector on Telegram and wrote it, reading it every day. Chris, I told you, man, you shouldn't be trading. You shouldn't be trading. Your problem isn't your trading. Your problem is the psychology, man. It's that need to be in a trade.
And I guarantee you have not overcome that since the last time we chatted. So I'm going to let you continue doing what you're doing. I can't. I've tried to give you some advice. You insist on wanting to make a trade. It doesn't impress me that you're making money, or you're starting to feel good, or you felt good for one day and you behaved yourself for a day. Do that for a month of doing those trades without actually executing on them. Just put paper. Have a whole binder. That I showed you my binders the other day. Making a binder full of entries. You do that for a whole month. Then come back and tell me, all right, I've spent a whole month. I don't even have the urge. I'm so right all the time now. I see that entry all the time and I'm happy with it. You know, I've got my emotions under control. Then I'll be more impressed. I don't care about your trades, honestly. You're not doing yourself any favors. I'm just being honest with you. And that comes from love, man. It doesn't, I'm not coming to judge you. I'm just saying, from what you've told me already in the past, you're not ready to do these trades. You're just not ready yet. And that's only based on the information you gave me. I could be completely wrong. Very small, limited amount of information that I have about you. But from what you've told me, you haven't, I guarantee you haven't fixed it in 2 weeks since we last talked. See how we've got this level here we're looking for? See how our narrative was, if we can get above that, then I'm looking for the next price leg. So we've got above it, we've coming back. So far, we're finding support inside that. So I want to see this high get taken here now. And if we start to waffle around inside here, then we're going into the 30-32. There's 32. So Crazy Ivan, the 38. We'll see what happens at 38. 40-42, you want to see it start to leave Dodge. In a long crude, good morning, Hadi. Morning, Hadi. It is the money that is not helping, and I need a binder. I write possible trades on a notepad. I used to have this chart, or this, I used to have this, I'd make up a sheet, and I know I wasn't disciplined enough to follow it, but I made up a sheet that said, what's my objective on my weekly? And I'd have a little thing that I could print off. So this sheet had daily chart on it. I just have to see if I can find it. Some of you might find use in it. I go, what's my upside objective? So I put daily upside objective, and then I would put the number. And I put, what is it? It's an order block, it's a breaker, it's open, it's a close, it's a mean threshold, it's whatever. Then I go, the weekly, what's my weekly objective, daily objective, and then what's my 4 hour, 1 hour, 15 minute, and that's it, 15 minute. I'd only trade on a 15 minute when I was making it. I couldn't imagine trading on a 1 minute chart. I always said it's too chaotic, it's nuts. There's no way you can trade that. It's ridiculous bullshit. I didn't realize that you can really, once you buy into the whole fractality of the markets, you can trade any time frame. So, and then when they hit, I would put in big highlighter. I put a big happy face in here. I put like a smiley face, star, check mark. I find any positive way to reinforce what I saw there. It hit a key level, perfect. And I get, yes, 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 you got it, man. That is exactly where you're looking for it to go. Good for you, good for you. And I just keep trying to pound that into my head all the time, trying to overcome my impulsive desire to just get in there. So for me, I was just looking for a pump, the dopamine hit of being right. And that punished me for years. So I am sitting in profit now off this reversal. I took this reversal and I just moved straight to profit. So if we can get that price leg finished, great. If not, if it comes back and takes me out, I'm off of here. And as soon as it takes out that high, I move into profit. And yeah, I know Mike will be saying, you don't no fucking clue what you're doing, blah, blah, blah. I'm protecting my money, and I'll take a little bit. I don't want to see it come back through here, though I could see it come back down into here. So sometimes I see this take off and I go, oh, there's profit there. And I go, why would I want to give any of that profit back if it's going to come back here? I'll just get back into it here. So I'll take my profit. And if it comes back into here, then I'll take it again. If it takes off on me, it shouldn't if I'm sitting down in here. But if it does, then it should not go through here. It should come back down into this order block. Then I'll catch it for long again. This high here would be a beautiful little tap and go. A little late to the show this morning there, Hadi. See how it just tapped that? Tap and go. Go, go, go. Don't come back. Now, if we get above that high, I'll go back to here and say, that's it. Just because I don't want to see it come back below here. And a revisit, I don't like revisits. I like to just tap and go. There's a couple of little tiny imbalances sitting right there. And if they come back to them, they'll take me out anyway, so. Nibble, nibble. Immediate rebalance. So this treats it like a fair value gap, taking out a high. I want to see if we can get back through here and get back in sync with this. Otherwise, if we close below, which we just did, we're just tapping it, coming back down inside this range here. We can get back above that level right there at 748. I want to see that go higher. We just came down and tapped this order block cluster here. See that immediate rebalance? Come back inside it, go shorter. You're inside this range here. I've got nothing inside here. Maybe in between. That range there to there, where's 50% of that? I'm literally in between like 5 candles for a high and a low. Order block here, so look around 79% retracement. See if we can get a fill of this fair value gap here. I'd like to see this. And you want to see that stay open now. Not a full fill. That'd be nice to see that little piece stay open and start going higher. If it trades through this, then we have a market structure break. We're coming back down deeper into this range. See that? Right off there. That's when it's acting the way you want it to act. Now you want to see it kick back through this imbalance. Immediate rebalance. Come back through there, get back in sync with it, and go back higher. If it starts pushing through and fills this fair value gap, you just go, that's a bummer. I don't want to see it retap it. So now I'm looking at this wick and I don't want to see half of that wick get taken now. And I want to see that start going higher. Through half the wick already. Wait for it to close. We want to see this little piece stay open here. Yeah. That little revisit. I just filled it there. Now the last line in the sand for me is that guy right there. It's open. Back to this guy again. Let's see if we can get back through here. Or we've filled this now, so, and we've hit this little breaker here that takes out these highs. And we've dug into it. Its mean threshold from here to here. That'll be it. You want to see it's got to leave here on a 42, 44, 45. I want to see 45 get back up here. Is it the money that is not helping and I need a binder? I write possible trades. It's not the money that's affecting you, my friend. It's the psychology that need to be in a trade, the adrenaline, the rush. That's the stuff that's hindering you, and the patience that you need to develop. If you're still executing trades, you still haven't learned patience. You still haven't learned how to taper that need to be in a trade instead of a logical reason to be in a trade. There's two different mindsets there. There's a logic, and no matter how much you try to convince yourself that you're logical, and the only way to find logic is to continuously repeat over and over again that logic and see that setup and focus on that one thing. If you're still scattered, you have to be honest with yourself and say, am I still all over the place with this trade? Because if I'm all over the place, I'm looking at this, I'm looking at that, I don't have a clean setup that I'm looking for. That level lost the mean threshold, and we took the low. So I'm looking for a structure break here, and to see if this one breaks below here, come back in, use support off of this to come lower now. And we saw this happening right off the imbalance already. So you see this, you see the changing direction occurring here, came back inside. We talked about that while it was happening. Then we look at these levels and say, I don't want to see this, don't want to see that. And what I didn't want to see is what I got. What I focused on is what I got more of. I didn't want to see it get below there. So I got more of that. So now we've dropped below the mean threshold of that candle. So now range extension, it's already extended. Now look for a run using this candle or this inversion here, the support breaking market structure and coming back down deeper into this range. So right now, if we take out this low, forget this whole probe here going higher for now. Stopped out green, good for you. Craig, Ollie, real talk. Hit thumbs up, folks. Thanks, Ollie. I have the 8th level on this Fair Value Gap. Watching the market bounce between them is mesmerizing. Yeah. Shepard, good morning, all. Good morning, Shepard. How you doing, buddy? How you feeling this morning? I hope you're feeling good, my friend. I miss my buddy Abs. I hope he's doing well. His wife's doing well. Much love to him and his family. Hadi, good morning. I was not in front of the charts. Needs to get through Monday's first presentation. Oh, you want to see it get through here. Okay. But just note, before it goes there, Ollie, note where price changes direction. So we're looking for this immediate rebalance changing direction. Now, for me, it has to get back and see how we have not closed below here yet. We've had lots of wicks down there. That's why you wait to make your decision at the close of the candle. And they're all on the mean threshold of this candle here. And they're still inside this retracement back to a support level. Now you want to see it start to really drive, and it's got to get back up on top of this order block here, and then aim for this premium inside this small range here. You aim for that rebalance. Macro is about to begin. So Erica, watch your macro now. I want you to see a positive trade. Wait for a low to get taken. Look for your reversal. Look for that first fair value gap that forms. So this is how it's happening. Oh, get yourself zen right now. Take a breath. Chris, don't trade this. Just focus on the setup. Kevin, Russell, same thing for you guys. Unless you feel the need, you guys want to, I can't stop you from trading clearly, but talk yourself through this. Right now, Erica, you should be like, okay, the macro is about to begin. As soon as that little alarm went off, do you feel the rush? Do you feel that little anxiety starting to kick in? Write it down. The macro on Wednesday at 10:50. This is how I felt. It was just about to begin, so I start getting excited about looking for my entry. That's good. And I'm waiting for my setup. So you sit here calmly and you wait for your setup. If it doesn't come, it doesn't come. We wait for 11:50 and 13:50. We just wait every macro for our setup to come. And if I go all day without having my macro, I go all day. We'll start tomorrow. If you're up all for 24 hours, you get 24 hours of macros to look for. You're bound to find one in there. You're bound to find one in there. And we simply follow that rule of if it trades below it, I'm on the wrong side of it, I get back into it one time. And if it goes out, I'm out. I'll wait for the next macro. And if it pans out for me, I'll just note it and say, was it my rules that made me miss that for my fail safe? Because don't forget, it's not just simply following the fair value gap, it's following the rules to the letter. To the letter. So still haven't taken a low yet. We have taken this little guy here, but for me, a better market structure break would be to see this, because this is buried inside of all this. So I want to see this whole thing get taken on the downside. So there's your market structure shift. If we come back through here, you want to see your fair value gap form, come back, tap it, and continue going higher, Erica. That's the one you're looking for. And then if you see the inversion occur, you get one swing on the inversion to run for lows, equal lows. And that's it. That's the setup. So I'll soften my voice and I'll be Erica. She sounds more like Demi Moore. Okay, this is what I'm looking for. I'm calm, I'm relaxed, I'm smiling to myself. I'm thinking, show me a fair value gap. Show me that little fair value gap that occurs right around the macro time. Zen, baby, zen. All right? This is your voice, Erica. I'm now thinking macro time. Looking for my entry. I'm so calm. I am so comfortable. I am so relaxed. I'm so confident about this particular trade setup. I've seen it so many times. I've showed Darren so much that I'm sick and tired of it. But I just can't wait for it to manifest right here so I can take it long. Okay, this is just all, we're turning way too sensual. Okay, I'm getting hot and flushed here. Erica, you've got a sultry voice. All right, so we're still waiting. And wait for something clean. Don't wait for I know what we're talking before about little tiny, like spreading these things out and looking for these little tiny micros and stuff. Let's just wait for a nice clean fair value gap to form. Because here's our 10 o'clock or 10:50. Now we're waiting for our little macro to begin. Our fair value gap. And see how we've not taken out that low yet. So this price leg's still in play for me. You're done with crude oil for today? Trades below. So you got this reverse, trades through it, comes back into it. This one here, trade below it, trade into it, range extension, trades through this range right there on the bottom, pops into it, runs the lows, range extension, discount arrays over here. So anywhere inside this box here for your discount. You've hit your discount box. You can come back into this order block here, wait for this, clean this, come back into here for premium discount. If it just bounces off of here, look for 50% of this range. See that? Right back and tap it. How beautiful is that? Now come lower, come back in deeper into this discount box. Sorry, Erica's like, you've left me, don't leave me. We're still waiting, Erica. We're not getting, don't worry about the blue dots. Don't worry about time in a bottle. Let's not add all those extra little tools. We're just looking for one simple little clean entry. And if it goes all the way around till 11:10, we didn't get it. Oh well. No biggie. Disney's running through some green. Oh, you bought some of this down here? You get some green on that? All right. I don't know how much that's worth. $1. It's almost 1%. Just shy of 1% for a day. That's pretty good money. If you had $107,000 when you bought that, you're up to 108,000. So you made $1,000, $1,800 today. No, $1,200 or something like that, $1,100. But you have to put $108,000 on that just to get 1% out of it. That's why I'm not big into these big dollar value unless you're putting some huge money in it. $1,000, that's a lot of money to put at risk just to get $1,000. Craig's probably putting $1 million in there and just made $10,000. It's like, pff, that's nothing, Darren. I always put about 2 or 3 million on Disney, and I just traded intraday some extra change I got sitting around. $50 to $100 a day. Good for you. You can make that in here with far less, far more volatility, far more movement. Just with 2 macros. Or micros, I should say. Using 2 micros on that. Just those couple of runs today, you would have hit your $200. You'll get there, Craig. We'll get you converted to all those stocks and come back to the dark side of index futures. Erica, have we got our trade set up yet? What are you saying to yourself right now? It's never going to happen? No, we're saying we're pulling this fib from this high to this low, and we're saying we're over 50% already and we never got our objective. You can automatically start cooling your jets and go, I didn't get my setup. That's a position. Celebrate the fact that you did not enter into this, even though it's running back up here. And Chris, you need to be writing this down and say, yeah, I saw these little micro movements. I didn't get in on them, or yeah, I didn't see there anything there either. It's over 50%. Yeah, you could have made money on that. How? 15-second chart maybe. You would have found an entrance. So let's go down to a 15-second chart, not a 1 second. Let's go to a 15-second chart and look for. There's a 15-second reversal right at 49. There's 50. Oh, right there at 50. You come back in. There's your fair value gap for a long. We're not inversion. We're just fair value gap for a long. Stop loss sits down here. So on a 15-second chart, it was right here. And you'd be in this for pay yourself at the premium. Sorry, right here. Or rejection block. As soon as it trades through that, you go, great. Do I find support at that level? Yep. Look for the next one up here. You hit that. You go, great. Is it trade above it? Good. No. Do I find support? Fair value gap. Mitigation. Anyway, you found support inside here. Look for a run above the high. Hit range extension. Now you're looking for any reversal here to scale out of that position. You may even said, here's my reversal right here. I traded below it. I'm out. That run there to that run there. I'm out. And watch. See how we trade back through it again? You go, okay, we'll get back in sync with that. If it comes back into this, I can catch that long. If not, I'll catch this high. Trades back above it. Catch that high. Continue back. You're back in sync with the market again. And watch how quickly this reverses. Oh, man. Fib tool on that, 50% on the way up. There's your 50% mark. You paid yourself. You moved your stop loss to break even, took half your trade on, then it's ripping back against you. And you go, oh, man, am I glad I took out my trade at 50% using my fib tool. Or the reversal, you got back in sync, you ran higher, got 50%, paid yourself there, and it came back and took you out. So you've been paying yourself on the way up on a 15-second chart. It works. It works, you guys. It works. It looks. I want to see price goes above 1045 to still be 1045. 1045 to still be bullish. Yeah, I like the mean threshold of that. If we lose the mean threshold, I start to lose my love for that trade. And if you're one tick below that low, you know, like if you're traded above that, came back, found some support at it, and you want to see that go higher, you mean threshold. I don't want to see the mean threshold let go, and let go. That would have taken me out. And you got to keep in mind this little retracement back in here as well. When you start this new range, you got to say to yourself, if this was going to retrace back inside this range. So here's some interesting things you have to kind of think about. Is another level of thinking here is, if I'm putting my stop loss at, let's say my mean threshold, I have a rule about, I want my mean threshold to be my line in the sand, and it does a retracement back inside this range. What's the minimum it could come back to? 50%. Do you want your stop loss in an area where you can expect price to come back into 50% of this range? No, you're going to have to leave it lower than that. Either below that old low, or leave it back down here, let it finish doing its job for a retracement, and then continue going higher. Now you can take this next leg here and expect it to go higher. So those are the things I have to rethink about when I use this order block, and it's so close, and you have a small range like this. You say, yeah, if it retraces, it can come back to 50% of that. Is that going to take me out? Absolutely. Is that going to frustrate me? Absolutely. So I have to be below the stay below the low and be willing to risk all of this coming back against me. If you entered in off of here, you think, okay, if it comes back through 62%, I want to see that hit that. this level here and then leave. If that's my line in the sand, there's my fail safe. If it goes against me, I'm out of my trade. I'll take a small loss and I'll wait for one of these lows or highs to get taken to get back in sync with the market again. You just paid for some information, that's all. So when I use that, I have to think about the range that I'm in. Is it above or below 50% of the range? If that ran all the way up to here and it was below 50%, 62%, it was banging off of that, I'd be like, sweet, I don't want to, I'll put my stop loss one tick below that low and wait. I shouldn't see it. I don't want to see it get below there. I don't want to see a retracement greater than that candle, which it would be like 60 some odd percent if that had gone higher. Sorry, I'm slowing down here. I want to see price low. Darren, look at the 951 fair value gap. 950, 1050 amazing seems going higher. 950 fair value gap. This one here. Yep. Right off there. Yep. Good support off those levels. Yeah. Agree with you, Hadid. Oh, not that big goal. $50. Social Security plus trading. Hadid's referring to this BISI here. See how it comes back, finds support off of it. That's the level you want to see price come back to and then leave. It comes back, leaves, and then retraces all the way back to it again, and then leaves again inside this range. And now we've got this waffling around here. So if we close below here, I would expect these lows to get taken and start to run back into this range again now. But you want to see a market structure shift below here with a close. You want to see a body get below here and below this. We're just coming back and retapping this one. Climb up above here, get above the mean threshold of this candle. We still have this price leg, albeit crappy looking. I want to see it get above that. My brain does not fully get ICT yet. Only been a year now. You've only been a year now, and this guy's a master's degree, Chris. So the guy spent his life studying economics and stuff like that, and it's just a year, and he's given himself time to figure it out. Not rushing in. That's the discipline you need. Focus on that, my friend. I want you to succeed. That's why I'm niggling at you. I'm digging at you. I'm poking. Hopefully you can see past that and just know that it comes from a place of, I care about you. I don't want to see you keep throwing your money away. That looks like a clean head and shoulders pattern. Did you say head and shoulders pattern? Did you say head and shoulders? The only thing you use head and shoulders for is washing your hair. That's it, for dandruff. If you've got dandruff, I'm all for head and shoulders. There's no such thing as a clean head and shoulders. That's retail, man. The reverse head and shoulders, just look for your little, see how we did that little tiny close below? Makes you go, am I going lower? Come back inside it. Now we're extending. You want to expect to see this range extension now. Zero to do with this head and shoulders pattern. It's just purely looking at support and resistance. Shouldn't say support and resistance. Support levels based on inversions. That's all we're looking for. Erica, you can see the fair value gap in Darren's chart too. This is what he's talking about right here, Erica. That's just a BISI. It's now become an inversion. Or it's a reclaimed, what does he call it? A reclaimed bearish, bullish BISI. I think that's what he calls it. I was looking at 1051, not 951. Oops. No worries. To me, price needs to close below that short, Craig. Go shampoo. Let's go shampoo. You're killing me today, Darren. Head and shoulders, knees and toes, knees and toes. Oh, 11 o'clock. 11 o'clock, run on liquidity, on all that stuff, 62%. Remember the 50 to 62% of the run since the beginning of the morning? But it's all up there that we should stick together. Look at that. Does that happen to line up with something we mentioned earlier? Baby, can you feel it? Right there. That's a 50 to 62% retracement after 11 o'clock. Look for a run back on the liquidity here from that high to the beginning of the run. That would be a nice place for it to pop into. If we get back above here again, we want to see it climb up on top of here. Stay on the, this is not the 50, 62%. It's just an idea. You just want to say, is that idea panning out? You don't go, oh, it sucks, he's wrong. You just go, I'm staying on each 1 minute candle. And yes, you can change your mind. It may come to here, stop and go all the way back up here. And we're pulling out the shampoo again, trying to get this head and shoulder pattern to wash out, to pan out, right? Sorry, I'm bugging you, Chris. So if it doesn't, then this, you can see why this head and shoulder pattern, if it rolls back over, it takes out this high here, which it just did. We're back inside it. So now you got your, I've traded below it. I've traded above it. Now I want to see this. If it trades below it again, you're in that consolidation stuff and you don't want to be mucking around in that. So you wait for lows or highs to get taken and wait for a structure break, then come back and use this for support. Now we're below it again. Wait for the candle to finish. 15 seconds. Range extension already. We've already taken out that low. We'll come back into this fella here. Again, the one that Hadi or you were talking about here at 950, Erica. There's a BISI there as well. See that? From there to there. We're running through that one now. See how we traded below it? You come back inside it, tap it right away, and then down we go. We're looking for more sell side. I'm moving my stop loss into break even and let that. These guys are idiots. So I'm moving into profit now. This short off of here, I got in right here. That short, and now looking for this to run to that 50% right here. A nice little comeback and tap that first before coming into here would be nice. And don't forget, I've reached for extra PD arrays. If the initial range you're in is right here, if you're doing boxing, this is the box we're looking for. If you're boxing this, you're looking for this level here next, then this level. And then you can reverse engineer this. If I'm looking for this one or this one. And there would be right back up into here. If that was the next price leg. Well, your fib tool here, 50%. If you got in on this short, pay yourself here and wait for 62%. If it comes back and takes you out, you've got a little chunk taken off of there. It's a quick way to get yourself in a, as soon as you break structure here, come back, tap it short. As soon as it hits 50%, move your stop loss to break even plus the cost of the trade. Pay yourself at that level and now wait for 62. So you're in a zero stress trade right now. And you just wait for it to manifest, right? Well, you talk to yourself like this and you say, well, Erica, we caught ourselves a nice, beautiful reversal there. That's great. Now we just go to stress-free mode, put on some Beethoven, and just kind of, oop, there's a happy sign. That's a happy little ring. We paid ourselves here. And we're just going to wait for it to pan out down here. We're in a stress-free moment now. You can sit and file your nails. You can sit here and crack your fingers, do some barbells. I don't know what it is you like to do in your spare time. Maybe just sit here doing some deltoids. Get some weights while you're resting. And you're talking to yourself super calmly right now. And you're going, I'm in a stress-free trade. I don't care if I make $5. I paid for coffee today. And it was fun. I just got to watch the trade pan out. Crude stopped me out, risk-free now. Partial 50% of the trade, 62% or 602 is my trade. There, so that would come back and take you out of your trade. And you go, good. If no, we got back in up here, didn't we? At break even. So you're still sitting here, you're going, that's okay. You can come back and tap these guys. That's perfectly fine. It's what I anticipated that you'd come back there. I'm okay with that. Now, you young fellas, I don't want to see you come back here again. You understand me? I want you to just take off now. I don't want to see you re-tap that. You've done your thing. Now, take your money and run. Take your apples out of my apple tree and get the hell out of here. I don't know why Erica's starting to sound like Clint Eastwood. Go ahead, make my day. So now I would take that stop loss, move it right to the top of that and say, now I'm going to, not only am I going to be in profit on that portion there, I'm going to move to this. I don't want to see it come back above here again. Right? Because now you're looking at this and you're saying, what percentage of this run is 50%? And would that take me out of my trade anyway? 50% puts you right here. That's all you get, kids. 50%. Your entry was here. You pay yourself there. Your stop loss is sitting just below your entry, which is 50% of, just above 50% of that range. If it ran to 62%, yeah, it would take you out. There's a little fair value gap there. And this is a 16, 17, 18, 17, 18, 19, should turn against 18. Tapping order block. Run through the mean threshold. Let's keep this going. Now I definitely don't want to see it come back up here. Eat through this candle, not just tap this and come back up again. Ease out. I'm out of that as well. See how this, we've got this reversal sitting right here as well. I'm kind of in a kerfuddle here. See how this is a little, if you're looking for a box to box, I want to get down to this box, but now I'm starting to see I've taken out some lows here and I'm starting to trade back through it and I'm revisiting it over and over again. I don't like that revisiting stuff. So I'm out of that trade for a short. And now I'm waiting to see if this holds and we start coming back deeper inside this range here. So for me, it has to trade back below here, find support at this, and then start extending the range some more for the next price leg down. If it comes back into that fair value gap and just taps above it, right in here, that's a premium box. I guess it's back into a premium box again. It's not the BISI I'm looking for. It's actually a SIBI. So inside here to tap that for institutional order flow and then continue coming lower. So I'm stuck between here and here right now. I want to see it tap off of there, come back here, find some support in here, and then get back in sync with coming lower. And if it starts to break through that, then I'm looking for the mean threshold of these two candles and then start to climb back up on top of that one, using this for support to run for these equal highs and that little mean threshold that hasn't been hit yet. But the smart me says, go eat lunch. I really want to short indices. Go eat lunch. Heron, good morning. Good morning. Craig, I broke my rules long. Crude again. Stopping the green. Good. ID still in. NQ is printing nice today. Nice. Now I'd like to see it come back and revisit this. I'll get short there. Do we manage to get back to 50% of this range yet? No, just shy. This is that break below the low, come back up inside it. I'm going to see that just retrace back through this candle again now and continue coming lower. You got the short on Bitcoin. You got a short up here. That's good. You're still stuck. As long as you don't want to see it break this structure here and that right there. So if you're looking at Bitcoin for a short, and this is the hourly chart I'm looking at here. I don't know what time frame you're on there, Heron, but so you've got these two overlapping right now. Right up to there. See how they're overlapping? So you've retraced all the way back up into the premium. You want to trade below here. That's great. You can retrace back into here. I want to see this start to really eat through this mean threshold. It doesn't matter. It's not validated anyway. I want to see it just continue to run through and look at the wicks. Look at half this wick. Get through half that wick. Then look for the lows, each low, and then aim for this downside objective here. I'm still short on that NASDAQ run. I'm looking for this box down here now. I got short off of here. I'm just going for my discount box. I'm going to try and teach myself to hold onto my trades. Just let her buck. You're risk-free. Good for you, Hadi. You and me too, buddy. 602 is my target. 602, 602, 605, 601, 607. All of those in there, target enough for me, man. If I just clip the edge of it, I'd be happy. No, I wouldn't be happy. That's not how I define happiness, Erica. That is not how I define happiness. I will not be happy. I will be dull, unintentioned, just whatever. Another damn discount array again. I'll be very neutral. I won't celebrate at all. I won't high five and peacock around the house. Zen feeling no Gen G. Oh, your stop loss was tight, Eddie. Let it ride, my friend. Look at the 15-second chart. Come all the way back up into here. The fact that we broke below it, came back up inside it, tapped it nicely right there. ran lower. We run higher, come back inside here. You got to be willing to let it run all the way back up in here. And if it takes out these highs, then I'm back on the wrong side of it. Find support here. You're inside this range. I want to see it just roll over, go burp, take this guy out here, come lower. It's got to get a shift in structure, get above here, or I get too worried about that. Not too worried just yet, Hadi. %62% retracement. The candle's validated. Watch off here. Get through that. In your 15-second chart, we're through the premium array, discount, premium, and we'll climb through the other side of it. Haven't quite extended the range, but we're about to. What's the high on that candle? 681. Extend the range. Range extended. And we're waiting for our new, what's this? 32. So take out the high. I want to see this really start to accelerate back down through here now. That'd be the turn of the bottom of the hour. Looking for a fair value gap here now, Erica. Look for that on the 1 minute chart. And see if we get back through here. So your 30, here's your 30. I guess this will be the bottom of your hour here. So tap, go, pay yourself. If you're looking for this quick little fair value gap, return into it, go long, take out the high, pay yourself. If it comes back through you, then from here, as soon as it takes out your high, move to break even. Let's see if we get another run back in here. below here on the close. I don't want a wick. I want a body get below here and use this cam to come down. Take out this cam here and start pushing lower. Breakfast time indeed. Took 2/3 off the 50, letting the rest one run. I'm barely getting this ICT, but I am seeing a little bit on the fair value gap. And when we have S&P down and NASDAQ correlating, nice, Peter. Good work, man. You can catch those correlations. Good for you. I just can't catch that shit yet. I'm still not good enough for that. So good early call on that HIDSIGHT. Well done. That retracement, I gave back a lot of that just in that run there. I was allowing it to come back into that discussion I was telling you about how much of your profit are you willing to give back. So I removed my stop loss, and then it traded back. It's like, okay, you allowed 60%. You're allowed the premium. Okay, you're allowed a little swing. Okay, enough is enough. As soon as it started doing this, I'm like, okay, you're done. It's more than showed you enough times that it's running back against you, and all that profit you wanted, you gave it back, and now you have to give away some of your profits as well. So I took a loss on that one, all because I kept changing my rules. There's Russell's rules of you start to get good at recognizing it, and you start to get lazy in your rules, and that's why you end up giving it back. So I took a loss on that one, Erica, all because I kept playing, screwing around with my rules. You see how HIDSIGHT had found that one and said, no, it's going the other way, Darren. I was like, yeah, well, I'll give it that. Oh, and I'll give it that. Then I give, forget it. You married the trade, Darren, you dumbass. You wanted it to come down to your discount box. You married that. Now watch it reverse on you. So now you've taken out those highs. You got to reverse. If it breaks structure to the downside, I get back in sync with it and just go, all right, I'll make back whatever I lost in here and see if I can clean that back up. If it doesn't, comes back, finds support, this order block, eats through this and goes higher, then we're looking for a bigger run in this range here. So it happens to all of us, man. Don't change your rules. Follow your rules. Hungry 2 and saw a big retrace at 61% and got out of my short. I'm just a demo today. Bitcoin is not printing. Low resistance. Erica, do you trade 15-second charts? I look at the periodically, but don't usually trade it. Too many signals for my taste right now. All good. 15 seconds are good to confirm quick pivots. Printing proper total suit patterns. I've got a head out today. Thanks for all the personalized attention, Darren. I'll rewatch this stream for sure, and I will do my homework assignment for 950 macro. You're welcome, Erica. Have a great day. Have a great one. Have a great one. 5-minute inversion in action. There's the reverse. 10 o'clock, 5-minute, retrace back into it, go higher. Fair value gap. If you're looking for the 10 o'clock fair value gap, that's the 5-minute one for continuation to the upside. I'm looking for 730, 740 upside. Get rid of this. Looking for this level up here now. When to depend on which time frame? Is there a pattern or depending on time or always 1 minute? No, I'm only on a 1 minute just to show you that all that we show you on a 1 minute chart is available on any other time frame. It's a personalized choice on which one you want to trade on. If you want to trade on a 5 minute, stick with a 5 minute pattern. You zero in on a 1 minute to give you your perfect entry on your 5 minute. For example, here's your 5 minute. You were watching a 5 minute there, JVK. I think it's JVK, yeah, or GVK. As soon as you see it retrace back into this level and a discount portion here, you're looking for a reversal off of this fair value gap or this inversion. So as soon as it starts to come in here, you're looking for any opportunity to catch your reverse on a 1 minute chart. So you're looking here, you're saying, if I can get back above this on a close, I'm looking for a long. Nope, didn't get it yet. Didn't get it yet. Now I'm finally above it right here. Now I'm going to catch this for a long. If I trade below that, that's my resistance level or my fail safe. If my fail safe fails, I'm out of that. We're probably going to come deeper into this range. So you're constantly looking for this turning point right here, which is right here. The moment you start digging into that, right there is when you're starting to hunt on the lower time frames for your entrance. And your entrance is sitting right here. You close above it, you come back, you go, good. My ideal place to enter in this is right here. And the reason for that is because that's my fail safe. If it drops below that on a close and then comes back to it, I can get out of my trade and wait for a cleaner setup to happen on my 5 minute chart. And then go. So once you got your entrance, you could go back to your 5 minute chart and manage it on your 5 minute chart. Say, where am I aiming for next? Well, I want to see this mean threshold. I want to see these equal highs get run. So I'm looking for mean threshold 728, 729, equal highs at 732, mean threshold. And then rejection block at 749, wick of 762, and so on and so forth. It doesn't always have to be on a 1 minute chart. Everything I told you, the only reason we're on a 1 minute chart is just so you guys can practice watching live price action, you know, paint in front of you quicker to show you the key levels. I was waiting for a 5 minute chart. You guys would get super bored waiting for 1 5 minute candles to paint to make my point, where a 1 minute chart within 20 minutes, I can show you where price is going to go. But based on your 5 minute chart, that's how I would, if you're sticking to a 5 minute chart and that's your bread and butter, you like that one, stick with 5 minute, enter in on a 1 minute reversal and manage it on your 5 minute. Keep an eye on the 1 minute, because if it reverses on you, you say, is that a logical place for it to turn? If it is, then that is my out on my 5 minute chart. You move to the sidelines and wait for your 5 minute chart to set up again. An hour later, you will look and go, okay, there's my setup. It's coming. Now on a 1 minute chart, do I find my entrance? Good. And now I'm in. That's how you do it. No, how I would do it anyway. That's how I do it. Not how I would do it, but that's how I do it. You're welcome. True. Since I work full time, I'm trying to find some approach. High time frame confidentiality act. It's just like the 1 minute box to box. It's still capturing a good chunk. Oh yeah. Okay. So here's some logic for you then, because I was doing the same thing. I'd be like, if I got to go on a call and the call's like, I got to do a transfer into the city and I know I'm going to be gone for 3 hours. You can go to an hourly chart and you say, they'll say, yeah, you've got to transfer in an hour or 20 minutes. You got to go pick up. I'll just go quick, get down into the 15 minute chart or 5 minute chart and say, what have I got in here that gives me a reversal? If it comes in here, I put a pre-order in there, stop loss down here. And if it comes back and takes me, my take profit's going to be up here, and then I'll leave. So I'll put my trade in there. So I'll already anticipate what I'm looking for on a 5 minute or 15 minute chart, and then come back 3 hours after my transfer and see if the trade panned out. Right? So if you're working, look at the 5 minute chart as your entrance. if you want to, if you're gone all day for 8 hours, look for a 5-minute or 15-minute chart for a reversal, and look for time of day for your entrance, and then go long. If you can get a coffee break at 10 o'clock, that's a 9:10 turn. Just say, I'll take my coffee break at 9:30. That'll give you a nice little opportunity to look for a 15-minute reversal. Enter in on a 5-minute chart just before you leave. Put your buy order in, keep your stop loss tight, and say, look, that's my fail safe. If it fails there, I'm out anyway. Whether I was sitting here watching it or I wasn't, I would be there. See how your 5-minute chart would be hit? So for your first objective here, getting in on that little guy there, your first objective's hit, you're done. And that was from 650 to 720 something handles. So you're almost 100 handles in that on a day. If you can get people kill for 100 handles in a day, you just made that on a 5-minute chart based on your entrance here. Does that make sense? Does that help you? If it helps, I'm happy with that. I'm good with that. That's what I want for you. Makes sense. This baker never runs out of cookies. Thanks. That helps. Thanks. Good. So I want to see this provide support now. See if we can get some a run out of this. I was looking for 742. I'd like to see a retap of this level right here. See that little imbalance, little bissy. You've taken out a high. Look for this. Ideally, now here's a little thing. Here's a little note. Only 30 of you are getting this. I've said it before in the other previous videos, like 300 videos ago or 200 videos ago. I get more excited about this going higher if this fair value gap occurs above this level, not below it. Okay. If you get wicks that take that out and that occurs below that, there's a chance of a retracement. If this occurs above this level, the chances are this becomes the support to go higher, and that should hold. Go back and test them. Have a look. So we traded through it. Now you got a reverse happening. This is your line in the sand. That there, mean threshold, this order block. If we start to eat through that, then we're coming back deeper into this range. And then because we've gone through 1, 2, 3, eating up that market structure break, then you're starting to come all the way back down into this range again. And you don't want to see that. I'm hunting this short on Bitcoin. What do you think about MOS, NTR? Both are fertilizing. Ah, yes. Mosaic. I had Mosaic years ago. I had Mosaic at 21 bucks right during that big old 2020 crash. And I had so much, thousands of dollars of it. And it came back to 27. I got out. And then it went to 71 bucks or some crazy shit like that. So, come on, Walgreens, get back up there. Get up there, Walgreens. Let's look at Mosaic. MOS. Mosaic. Reverse. You're inside this range. I'm looking for discount. Right there. I didn't even have to put it on there. It's right there. There's your first presentation fair value gap on a 5-minute. Mosaic, I'd like to see you come back to that very spot right there. It's exactly what I was about to just block out for you as a discount box. So I'll be hunting for the first 5-minute presentation on that. 15-minute. What's the first 15-minute one? Right down in here. Yeah, actually, it's inside this whole thing, so you're stuck inside that one. So if you were going to take from here to here, you're below 50% of that already. 15 hour. Puts you right here. We'll see if this overlaps now. I'm just looking for overlaps. Hour, 15-minute overlap. That's the 15-minute first one. 5-minute one. Not an overlap. But inside that array, you're looking for less than 50%. You're down to 25% at that level. Yeah, still looking inside this range, man. If this candle doesn't hold it now, if that doesn't hold price and you get back above here, then I'm still looking for lower. If this one gives up, look for down here. If that one holds, the mean threshold holds on that, you want to see it run back into this guy here. 26 bucks. Not big dollar bills anyway. If you put $26,390 on that, and it comes back to that order block, that's 26,570. There's your 200 bucks. You put 26 grand at risk. And what's the other one? NTR. I've heard of NTR before. I've never actually traded it though. Nutrien, that's what I've heard. You want the Canadian one or the American one? I assume you're looking for the American one. Right there. I guess I don't have to put it again. It's already hit it for you right there. That's the next little downside objective I'd be looking for. And see if you can get a reaction, what kind of reaction you get off of that. That puts you right on 75%, right in the money for option trade entry reversal. So I'd look for a reaction there on a 5-minute chart. High taken. Verica, you're listening to this later. This is your practice. Here's another practice for you. You're about to come into 1150 macro. Look for that little reversal to happen. There's the 742. I'm out. I'm done there. That's box to box. I was calling, remember I talked about this one before, being that immediate rebalance one. Never forget it. Never forget it, you guys. So lunch hour. Now I'm moving on the sidelines and waiting. This can take off without me now. I don't care. So on the 5-minute guy, there's your entrance right there for JVK. And now you're looking for here, old highs. And now you've hit your upside objective for rejection block. That's paid. And the rejection block happens to coincide with the premium box. Box to box. That's boxing. And you're done. I'm done. I'm out. I'm finished. If you get back above here, look for support on this and then keep going higher. So Erica, now when you're listening to this later, watch this starting to form here now and ask yourself, imagine putting your chart. So if you want to pull your chart on a set, if you've got two screens, pull this chart like right like this. Follow it right now as time goes on. So move your chart right to here and follow along with how it's forming. So it's like you're getting to watch it all over again. Pull your chart right to the edge, and as it starts to click one, you just go make your decision on the next one. And as it starts to unfold, start looking for that. There's the 950 or the 1050 macro or 1150 macro. There's your reversal. You're just tapping it now. That's where you go short. Stop loss would sit below that low, and that's your fail safe right there. So you mark that on your sheet and watch as it starts to manifest, starts to run. So as soon as it takes out that high right there, you would pay yourself a portion, and I'd move to break even. Right there. To pay yourself, move to break even. You have a zero stress trade now. Now you get to sit there and wait and see what you got up here. So that was your entrance. You're in the money now and you're stress free. So you can just zen yourself right now and just kind of study how this price action's working. So as that next candle appears, I want you to just click this little button here, move to the next candle. You say, oh my goodness, that trade panned out exactly as he talked about. I paid myself there. I moved to stress free, and I'll wait for this candle's wick to get taken. The mean threshold, we closed above it. I'm anticipating we're going to go to that high now. Forget this old price projection. And if it comes back and takes you out, so be it. You got a small trade. You looked for the recent candle's high. No different than you'd be looking for a daily high. If this was the daily chart, you look for the previous day's high, or an hourly chart, previous hour's high, or whatever. You ran it, you pay yourself. Your stop loss now moves to from here into break even plus the cost of your trade. You made some money on that small little piece there. If it comes back and takes you out, trade's done. Move to the sidelines and wait. If it takes out that high, move to the previous high and wait. Watch right here. Hits it. Pay yourself. Move your stop loss to here. If you've only got one micro one, then just move it to here. And wait. Because you want to see this candle. Now the logic is there. You're on a nice big tear now. Now you want to see if this will continue to run out those equal highs above you up here on a 1 hour chart. This candle here you want to see provides support. If it does retrace, you want to see the high and the open. That's it. Ideally, you want to see a fair value gap form in here. Institutional order flow entries, you want to keep going higher, or just Rip for 804. 804 is right. What's 804? Near the mean threshold of this candle. It's the top of this daily. I'm looking for again here. So you're looking for 809. 809. Right up there. So this would be a nice little fair value gap forming here in the next 25 seconds. Come back, give it a little kiss. Mean threshold. You don't want to see the mean threshold get taken. Ideally, just a tap on that old high there would be fine. And then keep running higher. So you're in profit from your macro that we talked about. 1150 macro. You got the fair value gap, not the inversion. You got the fair value gap. You pay yourself at the next candle. It takes out the next high. Pay yourself. Move your stop loss to here because we want to see this. There's an institutional order flow entry drill that we were looking for. Now I want to see that just leave here. And what did it tap? Old high. Oh, so close to hitting that old high. I'll take an institutional order flow entry drill. That's fine by me. You want to see this all stay open now and start pushing higher. Because now you're looking, Erica, when you're looking at this, you're saying to yourself, I want to see this stay open because if I see it starting to close in, then this becomes the new reversal. And now I've got a new one up here. So fail safe would move to here because I don't want to see this. If this forms a fair value gap here, I don't want to see that get taken now and start to reverse and come back lower. So I want to see that stay open and keep pushing for higher prices. Does that make sense? So you're very zen right now, Erica. You're just kind of enjoying your trade and you're just looking for a logical level that you want to see price reach for, which is mean threshold here. And then I'm hunting. If I was hunting for a short, I'd be looking for a reversal here. Now that you're in this trade, you look for that first opportunity to see a reversal happening, and then you get out of that long trade. That's another method of managing it. Or you pull your fib tool and you're already in the premium already anyway, so you're looking for mean threshold, rejection block, wick, a half wick, old high, and then this old high up here. And you see how when you put that trade on there, I know when you're looking at this, I'm talking to Erica now because I promised I'd spend some time with what she's looking at, but the rest of you can still hear this as well. Russell and Chris, if you're still listening. That is the first macro you're looking for the fair value gap to form. It forms right here. Now I want to see it tap it and go, and I literally tapped it and left. Your fail safe is right here. If it trades back through it, you're on the wrong side of it. We're going to start running lower, right? You didn't have to pay any new information for a change in direction. You were like, oh, it did do exactly what I wanted it to do. I want to see a range extension. I want to see this fair value gap on the hourly fill in. So now I'm looking for any opportunity where it would turn on me after filling in that fair value gap breaker. We're hitting the breaker. This is strong breaker here. So chances of it rolling over here is quite high. So you look for any opportunity to see that come back and take you out. So this is an immediate rebalance. This becomes a fair value gap for me. And I'm out. We trade below that. I'm out. Watch the 17 seconds. So you could take some from that simple run here, 744, right there, you're out. Now it's coming lower. right? So what was that one we got in here? At 744, and we got out at 784. So 40 handles you just made right there on a reverse, and you're done. It takes off on you, wait for it to get above here, find some support, get back in sync with it again. If not, you're coming back into this range. That's it. Your trade's over. We gave you 2 really cool trades there today, Erica. And if that's all you traded today, they're like precision level trades. You make one mistake, you pay for a little bit of a mistake, and you get back in sync with it, and your trade's done. You've made your money back. You're calm the whole time. Study that price action. That's all. And if it turns on you, you don't care. You say, you do your thing, man. I think it's coming lower. And if it goes back above me, then I wait for it to get back in sync with it again, right? Good. I'm glad you found that, JVK. I'm glad you. So now I don't want you to actually take trades there. I'm not here trying to promote you to stay in a trade, but I just wanted to try and give you a calm narrative that says these are logical places. If you follow the algorithm very carefully and tightly, like you see me just saying, I want it to stop there. If it doesn't, my fail safe's here, because if I get above this and find support at it, then I want to keep going higher. But otherwise, I'm short on this idea. I'm not actually in a trade right now, but if I was short on that, that's where I'd be aiming to come back down lower. And it's 12 o'clock, so I would expect to see this come back shorter now, because lunchtime, you tend to see 12 o'clock make a swing point. So this hour, I'm expecting a turn. Well, if I expect a turn, wouldn't it be great if it could just clean out these highs here? Then I'd hunt for a 12 o'clock reversal. Remember, now I go to my time in a bottle theory. And remember, what do I say about 12? 12 is a turning point. And where would be a great place to take a 12 on a turning point in that hour? 12, 12:30-ish would be ideal, because now I'm hitting 30 candle, 30, 32. I'm waiting for Crazy Ivan to see you and then start running back against you. How's that for a crazy narrative? So watch here. If we close above that, then get back in sync with going higher for now. And that little 40 handle trade is banked. It's in your pocket. So if it takes off on you now, why would you be mad at somebody putting some money in your pocket? You wait till you get back in sync with it. If it goes higher, you want to risk paying a premium for a more premium price around a breaker around lunch hour, where I'm expecting a turn to occur. Because this hour has already made a swing point right here. See that? Here's the 7 reversal on this after 7, 8. Here's the 9 reversal, 9, 10, 11, 12 reversal. Come back into 13, 14. So you got the next 2 hours. You want to see a run down. And then look for a 14 reversal back into a 16, 17, taking out these old highs. See how that's still holding price? We're still coming lower. Hans is looking for his regular trading hour gap. Where is that, Hans? Where is that regular trading hour gap? I love Hans and his regular trading hour. It's this big puppy right here. Oh, we just filled it. We just hit it. That is, he's been hunting that thing all day. Look at that. Perfect fill. 12 o'clock, reverse. You've got a small reversal here. You want to see that hold price now and start coming back lower inside this range. Pull your fib tool on here now. So we came back and filled that fair value gap, hit right off the top of that order block, which we said we could see it return back into here. So if it starts to pump back through this candle here, find support, then you're looking for a run up above this mean threshold and these old highs. If not, if that just continues to find support and we start to eat into this candle now and get through it, then we're looking for a run down deeper into this range. And I'm looking for 50% right here. So if you're short off of that, you want to look for your stop loss is sitting here. You're looking for your run back down to 50%. Pay yourself, pay yourself, pay yourself on the way back down using that method. And if it comes back against you, you just paid for some more information to go long. So the ideal place to go is right there for a short. Because if it's wrong and it trades through you and comes back, taps you out at break even, you can continue going higher. So if you have the patience to wait for this retracement into here, 1, 2, 3 levels, you had all 3 of them. You trade low, pay yourself a portion here, and you're looking for a 50 next. So as soon as you take out a low, pay yourself. A pretty good video today. If you like what we did today, by all means, hit the thumbs up button. I always appreciate that. And if you're new to our channel, feel free to subscribe. We're here every day. Hit the notification button. We'll let you know when we're on. And we got all the characters in here. We got new people. We got old people. We got elderly people. We got Abs. We got Derek. We got Lambo. We got a D and the boys. They're all there. They're all on our channel. You're welcome to subscribe to our channel as well. Our ThetaWave channel. It's in the description above. You're welcome to pop on by and share your thoughts with us. We're all keen to learn something new. Keep it ICT related. We're not into retail stuff. No offense to you retail people. We are purely ICT traders, so just keep it ICT stuff. And if you're out to show a video and somebody else is doing ICT stuff, if they're making money off of it or they're trying to sell something, I'll delete it. I don't care how good it is. I'm not looking for here to promote people making money off of ICT stuff. We're doing it all for free. We're trying to help each other out, trying to grow. I'm not here to promote anybody's stuff except ICTs, obviously. So you're welcome to pop in and share your knowledge. Ask questions. Don't be afraid to make mistakes. Nobody's there posturing. We're all just trying to make our way through it. You're welcome today. Thank you, Darren. Very nice day. Thank you for reminding me to give the thumbs up. I always do it, but forgot today. The kid is being crazy. Hang in there, Peter. 2-year-olds could be nuts. Yeah, they'll be a great blessing, though, as they start to settle in there. They're great when they're sleeping. They're great when they're talking. Just enjoy the that new, fresh mind growing. That's just a beautiful thing. Ed, you're welcome. Greg, you're welcome. Shepherd, I'm going to educate. I'm going to do education stuff the next couple of hours and be back after lunch. I love him so much. But dang, today was not close. Destroy the house kind of day. 2-year-old. Craziness, hey? Oh, that quickly turned on us. There, now see, you got some new information to go along. If it closes, if it comes down below this again on a close, move to the sideline to wait for the highs or lows to switch up. So if you're going short on that and it reversed on you, took that out, that's a fail safe, came back inside here. That's a potential long. So you want to see if that holds now. If it trades below that again, you're in lunch hour lashings. So I want to see this push through here now and run up higher. Yeah, I agree. 814, is that what you got? 814, 822, the top of this fair value gap here. 814. This one's low is 812. Let's see if we get up in there. You guys are having quite the little chat there. So got 41. D, you posted like crazy. Lunch hour seems going lower. Change in direction. Look at it. Real close. Changed above, came back inside, went above, came back, give it a kiss, go on higher, extend the range. There you go. Oh, you see here. I see what you're saying right there. And there's also another one up here. Yep. 823 to 825 up there for a premium array. I do like the way you're thinking, Hadi. I do like it, my friend. Keep this in mind here, though. We run back up here and wick into this, and we do not clear this on a body. This is that retest of this to go lower. So all the time, you got to get above here. 794 on a close. You got to get above here. See how it's freezing? The bodies are sitting on it. You got to get above that on a close. Because if that reverses on you, you'll be like, what went wrong? This right here. Keep that in mind too while you're looking at that 15-minute chart. And watch how we're eating into this. This is lunch hour. Smashing the hell out of you here. Is 62% on that. Off this breaker. Traded below it now. There's 70% optimum trade entry reversal. You're going to go, you better go now. Accelerate your breath. Right up to the premium. Lunch hour lashings. So we've traded below it, we've traded above it, now we're back below it. Out. In your lunch hour. So that's it for me. I'm going to keep my little bit of profits today, and I'm going to move to the sidelines, and I will see you guys after lunch. If not after lunch, I've got to go get my blood work done. So I am going to go and get that done, and I will see if I can come back this afternoon. If not, I'll see you guys tomorrow morning. Keep in mind, we got these relative equal highs above us yet still. You still have that premium 15-minute up there. And on a 1-minute chart, wait for lunch hour to finish. You could get a retracement back at lunch hour on this range, like a deep run back into this range here. So just be prepared for that. Start marching out all your key levels in your wall on what you want to repel off of on the way down, or what you want to provide a level of support where structure breaks, and before you start to run in that. And if this is the 12 o'clock turn, again, anywhere in that 12 hour, if you see a market structure break now, and we use this candle for support to come lower, look for a deep run into this range of 50 to 62%, or discount boxes down here. Just pull them all out and look at them as potential landing zones. Don't forget these order blocks on the side, support, resistance on the way back down. This key level, keep your eyes on that as well. So I'm looking for any opportunity now at 12 o'clock to catch a nice, decent reversal. Might be 12:30-ish. You might even be 12 o'clock, finish this little pump up. So 10, 11, or 9, 10, 11, 12 on here. And then 12 finishes that run. And then 13 starts the next run down. So that's what you could see. Other than that, I will see you guys in the charts or over on Telegram there. I'll see you there. If you have anything you want to talk about, I'm over there. I'll pop in. If I make a trade, I usually chat with the guys in there. Hadid posts his trades in there as well, so you guys can keep in touch with him on that side. If you have any questions, pop on in. He's always keen to answer any questions you got. And I will see you guys bright and early tomorrow morning. Thursday, get your garbage out. It's garbage day tomorrow. I don't know if it's garbage day for you tomorrow, whatever. Anyway, we'll see you guys tomorrow. Erica, thanks for tuning in. Thanks for doing your homework. And I do appreciate you guys following through. When you say you're going to do it, you follow through. I love that. I'm eager to help people who keep trying. So I will see you guys tomorrow. Take care, and thanks for tuning in. Don't forget to hit the like button and the subscribe if you're